Good morning, guys. Good morning. Good morning. Sure, you're having a great time. Good morning. Please share the links with your friends, loved ones. I don't know what's been happening to YouTube the past few days or close to a week now. It's been failing. I don't know why. I don't know why. So please share the link with others. I believe you can hear me. Share the link with others. And if you can hear me, drop a comment if you can hear me. Can you hear me? I hope your day started well. So let me know which of the pairs are you contemplating? Are you considering trading today? Today is Tuesday, September 17th. Which pair are you considering trading? Which pair do you want us to look at? Please drop it in the comment section. I'm so pumped up, so pumped up. Remember, this week is FOMC. Okay, FOMC will be released, I think, tomorrow. So if you're trading, if you're considering trading USD pairs, please um, be conservative. Please be conservative. You could wait for FOMC to be released before you trade USD pairs. But if you insist on trading USD pairs, like like me, then you should be very conservative. Okay, be very conservative. Can you hear me? Can you hear me? Can you hear me? Please, I would like to know if you can hear me in the comment section. Good morning, Mr. Godswill. Good morning. Good morning. Good morning. Good morning. So, which pair do you want us to look at? Please drop it in the comment section. Good morning. So let's start by looking at DXY. If you look at DXY is still, as you can see, DXY is strongly bearish, which indicates that the dollar is, it indicates dollar is weak. Okay, sorry. Yeah, dollar is weak. DXY is bearish. It indicates that the dollar is weak. We're on the monthly time frame. And you can see for the past 3 months, 3 months, the dollar has been weak. The dollar has been weak, and that's why you would see on GBP USD, NZD USD, pairs that have USD as the counter, you would see that those pairs, they've been bullish for the past few months. They've been bullish, and that's because the dollar is weak. Yeah, dollar is weak, as you can see, and it's still bearish. It is still bearish. So you have to be very careful if you're considering selling GBP USD, Australian dollar USD, New Zealand USD, Euro USD. This is not the right time to go bearish on those pairs because the dollar is still very bearish. So this is the monthly time frame on DXY. You can see also weekly, we have areas of liquidity residing at this previous low, and I think it's one of the reasons for the bearish move. You can see liquidity needs to be cleared at this low. Then if that is cleared, the next target will be the liquidity residing at this relative equal low. this equal low. So those are the areas, or those are the levels the dollar will aim for. Okay, so you can see at the moment liquidity residing at this previous low has been cleared, and this could be the next target for DXY. Okay, this could be the next target for DXY. Now, after liquidity has been cleared at this previous low, if a bullish reversal pattern forms on 4-hour, you could consider going bullish on the dollar. I hope you are with me. After liquidity has been cleared at these lows, if a bullish reversal pattern forms on a daily time frame or 4-hour time frame, you could consider going bullish on the dollar. That is, you could consider selling GBP USD, you could consider selling New Zealand USD, you could consider selling Australian dollar USD and Euro USD. I hope you're getting me. Okay, so that is what I am currently waiting for. That's what I'm looking out for. I'm patiently waiting for a bullish reversal pattern to form on a daily or 4-hour after the current liquidity has been cleared. I hope you're getting me. So that's it. Let's see the daily. The daily also is still strongly bullish. So let's see how the next candle will form after liquidity has been cleared. Let's wait for the next candle to form on a daily or the 4-hour time frame before we consider going bullish on DXY. I hope that is clear. So let's look at currency pairs. If you have any question, if there's any pair you want us to look at, please drop it in the comment section. Drop it in the comment section. Let me know which pair you want us to look at together. Drop it in the comment section. Okay, so let's go to currency pairs. Let's start with, okay, let's look at gold. Gold has been bullish for weeks now. Yeah, gold has been bullish for those who are selling gold, sorry, buying gold. For those who caught the move, congratulations. And for those who are trading against the trend, right now you are in serious drawdown, especially those who don't make use of stop loss. You can see that is why I always advise that you use stop loss on all your trades. Imagine you've executed a trade. This is where if you had sold gold, probably you entered sell because of all these patterns we have here, these candles. You decided to sell gold. You should have set your stop loss using the highs of this candle, because this is an area of liquidity and there's a high probability that they might go for that area, and that is what they have achieved the past few days since last on Wednesday, I think. Yeah, last Wednesday they went for the liquidity. So your stop loss should have been the highs of this candle or a few pips above the high of that candle. If you had set your stop loss at that level, for those who are selling, the market would have taken you out. The market would have hit your SL. You leave the market and wait for the next opportunity. Wait for a good sell setup before you go bearish. Don't fight with the market. Accept that you would be wrong. You won't win all trades. Is the reason many traders are struggling in the market. You can't always be right. You don't have control over what the market will do. The only thing you have control over is risk. How you manage risk will determine how successful you will become, how profitable you will become in this business. Don't fight the market. Before you execute the trade, know the right time and price to exit the trade. It is very important. Don't fight the market. The market would always be right. The market would always be right. So you should learn to control risk. You should learn to manage risk. You are a risk manager as a trader. If you don't know how to manage risk, you will keep blowing accounts. Always use stop loss on all your trade and ensure that your stop loss does not exceed 2%. For those of you that are new to trading, your stop loss should not exceed 2% of your account. So if you have $1,000, if your capital is $1,000, 2% is $20. You shouldn't risk more than $20 on a daily basis. Don't risk more than 2% on a daily basis. You shouldn't lose more than, if your balance, your capital is $1,000, don't lose more than $20 in a day. Because most videos you watch out there, they will tell you don't lose more than 2% on a trade. If you're taking 5 trades and you are risking 2% on a trade and you are taking 5 trades in a day, that is 10 risk that you're taking. 10% risk. Don't risk more than 2% of your capital on a daily basis. Okay, don't risk more than that. And for those of you who have less than $1,000 in your account, you are trading with $100, you're trading with $200, your risk might be a little bit high because your capital is small. Okay, because your capital is small, your risk might be a little bit high depending on the strategy you're trading with. If you want to stick to 2% risk on $100 account or a $200 account, it means your market risk, the risk you take in the market should not exceed 20 pips. 20 pips. If you're trading with $100, if you're trading with $100, the market risk on any trade should not exceed 20 pips. That means you have to be trading lower time frames, like 5 minutes, 15 minutes. And as a beginner, I don't think you have that much experience to be able to trade on those lower time frame. I hope you're getting me. Always apply stop loss. Don't fight with the market. And you should risk amount you are comfortable losing. You should be comfortable with whatever risk you're taking in the market. Don't over leverage. Don't say because Mr. Max is risking 5%, risking $100 on a trade, $50 on a trade, you would also take such risk. $50 might be too high for you. $50, if you convert it to naira, it's about 80 something thousand naira now. That might be too high. Some of you don't earn up to 80,000 naira per month as salary. So you cannot be risking that on a trade. Risk what you're comfortable with. If it is $1 you are comfortable losing in a day, risk $1. If it is $2, if it is $5, take that risk and be okay with that. I hope you're getting me. So that's my take on gold. I'm expecting gold to sell. But before I will go bearish on gold, I want to ensure that DXY is bullish. I hope you're following me. I want to ensure that DXY is bullish before I would go bearish on gold. As you can see on gold, the previous candle, that was yesterday candle, it closed as a spinning top. It's a bullish spinning top. And after the formation of a bullish spinning top, what do we look out for? We wait for the next candle to close bearish. So if today's candle closes bearish, you might want to go bearish on gold tomorrow. But remember, tomorrow FOMC data will be released. FOMC meeting holds tomorrow, and that could also influence price movement. So you have to be very careful if you're considering trading USD pairs, especially gold. Okay, we expect high volatility in the market tomorrow. I think today even there's a news from the United States. A news will be released from the United States. A major news will be released. Yeah, I remember today, Tuesday, a major news will be released. Okay, so if today's candle closes, technically, if it closes bearish, we might want to go bearish on gold tomorrow. But let's see what's happening on the 4 hour. Let's see if we can take a set trade on gold. Let's see 4 hour time frame. So you can see 4 hour, you can see there are several candlestick patterns that are formed on 4 hour indicating change in trend, right? Several candlesticks has formed on 4 hour indicating change in trend. So today, if I'm going to trade gold, I would risk selling gold today. I would risk selling gold. And at what point would I consider selling gold? Let's see what we have on 1 hour. Okay, so 1 hour is currently trading below this support. Probably if the current 1 hour candle closes below this support, I could risk selling gold. Okay, I could risk selling gold if the current 1 hour candle closes below this support. And if I'm selling gold, let's calculate the risk. If I'm selling gold, my stop loss would be at this level. Am I comfortable taking this risk? Let's calculate the risk. If I'm not comfortable taking the risk, then I'm going to skip the trade if the risk is too high. Okay, if the risk is too high, normally on gold, my risk does not exceed 100 pips. Okay, so let's see from this point, the market is currently at 25747, 747 and 747 to 97. That's about 230 pips. You can see that risk is too high. So I wouldn't be taking this trade because the risk is too high. The risk is too high. I can choose to set my stop loss at this level, but I believe this level can be hunted for. They can easily hunt for this level. That is why I can't use this level as my stop loss. I can decide to set my stop loss at this level, but it will be very risky to use that level as my stop loss. I hope you are following. So I wouldn't be taking this trade because the risk on it is too high. I can't afford to take such risk. Are you getting me? It's too high. 240 pip risk. That's too high. On gold, I ensure my risk does not exceed um, 100 pips. 100 pips. And if the market is offering me a risk higher than that, I would have to let go that trade. I hope that is clear. So that's my take on gold. If you are considering trading gold today, you should look for sell. This is where the sell started. This would have been the good price or a good time to execute this trade. If I had executed it at this point, that would have been great because at this point we had a bearish spinning top. So this would have been good entry for sell. So if I had sold from this point and my stop loss at this level, I think that risk is less than 100 pips. Yeah, it's less than 100 pips. So this is where I should have entered sell on gold. But right now, gold is trading about 100 pips below that level. So that trade is not for me. That trade isn't for me. I have missed that opportunity and I have to wait for the next opportunity. I wouldn't jump in because of FOMO, fear of missing out. No, I just have to let go that trade and wait for the next opportunity. There will always be another good opportunity to, cash out from the market. So be patient, be patient. Okay. Are you still here? Are you still here? Are you still here? Can you still hear me? I believe you can hear me. Okay, so let's move to GBP USD. That's my take on gold today. Look for a sell on gold and let's see. Okay, Australian dollar USD. I am considering selling Australian dollar USD. I want to sell Australian dollar USD, but the bears are not set yet. There is no clean setup yet for me to sell. It is not clear yet. Okay, so I'm waiting for a bearish reversal pattern to form on 4-hour time frame. A bearish reversal pattern should form on 4-hour time frame. You asked me why has Australian dollar USD been bullish? Why has it been bullish for some days? Okay, this is the reason. You can see this level was an area of liquidity. That is what they are going for. I think they've cleared that liquidity at the moment. That liquidity has been cleared. You would also notice we had a fair value gap here above that level of liquidity. You can see we had a fair value gap here. You can see this fair value gap here. Okay. We had an area of liquidity and also we had a fair value gap here, which wasn't filled entirely. You can see it wasn't filled. So there's a high probability they will fill this gap. Liquidity residing at this high has been cleared. The next thing is to fill this gap. So since I'm considering selling, I would wait for this gap to get filled and wait for a bearish reversal pattern to form on 4-hour before going bearish on Australian dollar USD. I hope that is clear. I am bearish on Australian dollar USD this week. So I'm waiting for a valid bearish reversal pattern to form on 4-hour before going bearish. I hope that is clear. Any question, any question, any question? Are you still here? Are you still here? Drop a comment if you can hear me. I want to be sure you're following. Can you hear me? Can you hear me? So that's my take on Australian dollar USD. Let's move to GBP USD. I'm also positively it's positive. GBP USD is positively correlated with Australian dollar USD. So I'm also considering selling um GBP USD, but it is not set for sell now. GBP USD is not set for sell. I would only go bearish after there's a high probability they would clear liquidity residing at this previous high before GU will go bearish. You can see we saw this similar pattern on Australian dollar USD, but on Australian dollar USD liquidity has been cleared. That high has been cleared on Australian dollar USD. So I'm sure this liquidity, this high will be cleared on GU before GU will go bearish. Before GU will go bearish, that high will be cleared, and also there is a very small fair value gap at this point. I think I'm right. We have a very tiny, you can see this, yeah, there's a tiny fair value gap here. Can you see it? This fair value gap here. So they are likely going to fill this gap. So this is where one should be considering selling. Okay, just wait for a bearish reversal pattern to form. Wait for a bearish reversal pattern to form on 4 hour or daily time frame before you go bearish on GBP USD. Okay, wait for a bearish reversal pattern to form on GBP USD before you go bearish. I wouldn't suggest you buying. I know some persons want to buy on GU from the current market price, but for me, that would be late entry. That would be late entry. You are catching the trend very late, which would demand that you take high risk. These are the levels one would have bought GU. This would have first entry, and this would have been second entry. Those are the best levels one would have entered a buy on GU. And at the moment, the market is trading, I think, over 200 pips from those levels. Right? Yeah. If you had entered from this first price here, 1.3043, it would have made close to 200 pips. Yeah, 3043. Market is at 322. That's about 180 pips. Yeah, you would have made close to 180 pips. And if you had entered from this point, you would have made close to 150. Yeah, 150. 150. And on this, you would have made close to 180 pips. You can see this will be 150, 180 pips. So why would you want to buy when price is currently at a premium area? Right? Price is currently at a premium area. If you apply your Fibonacci, if you decide to apply Fibonacci from this swing high, let's just assume you work with this swing high to this swing low, you can see that price is currently at extreme premium. You can see price is currently at extreme premium. Even if you decide to work with this previous swing high here, price is still at a premium level. You can see above 75, extreme premium. So it will not be wise to start buying GU. You should wait for a pullback. If you are considering buying, wait for a pullback before you go bullish. You cannot buy GU. That won't be a wise investment. Buying GU from the current market price doesn't make sense. So wait for a pullback if you are considering buying before going bullish on GU. That's my take on GU. I'm looking out for a sell opportunity on GU, but it is not set yet. It is not set yet. If I don't see a bearish reversal pattern form on the daily or 4 hour time frame, I wouldn't trade. I wouldn't sell GBP USD. I would not sell GBP USD. I hope you're getting me. So that's my take on GU. I'm waiting for a sell this week. I'm considering selling GBP USD. So on DXY, I should see a bullish reversal pattern on DXY. Then on GU, I should see a bearish reversal pattern on GU. I hope that is clear. I hope that is clear. Good morning, Mr. Ismail. Thanks for joining. Thanks for joining. Good morning, Mr. Godswill. Thanks for joining. Okay. If you're on this live stream, I can only know you are on when you comment. It is only through your comments I would know you are participating in the live stream. If you don't comment, I wouldn't know you're on this live stream. Okay, so I can only see two persons, Mr. Ismail and Mr. Godswill. Okay, so which other pair do you want us to look at? Let's look at Euro USD. Euro USD also, I'm expecting a bearish move. You can see similar pattern. The pattern we saw on GU and AU, you can see that's what we have on Euro USD. That tells you that those pairs are positively correlated. Okay, they are positively correlated. So you should also be looking for opportunity to sell on Euro USD. Okay, so we have liquidity residing at this high. Okay, liquidity residing at this high. So there's a high probability they would come for the stop losses at this high, and also above that area of liquidity, that level of liquidity, we have a fair value gap residing at this. You can see this fair value gap. So there is a high probability they would come fill this gap before going bearish. So these are the areas you should be considering selling Euro USD. This level and also this zone. Those are the areas you should be considering selling Euro USD. I hope that is clear. I hope that is clear. Any question so far? Any question? Any question? If you have any question, please drop it in the comment section. Drop it in the comment section. And if this is your first time participating in the live stream, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. And if you're getting value from this live stream, please give it a thumbs up. Okay, only give it a thumbs up if you're getting value from the live stream. Okay, so let's move to the next pair. Let's look at one or two more pairs before we end today's session. Okay, on Euro Aussie, I'm considering buying Euro Australian dollar. Okay, let's see how the current 4-hour candle closes. As you can see on Euro Australian dollar, liquidity residing at this previous lows has been cleared. The liquidity that was residing at this previous low, I think it has been cleared. Yeah, it has been cleared. We had liquidity at this low. We also had liquidity at this area, you can see. So that liquidity has been cleared, and below that area of liquidity, we had a fair value gap here. Let's see if that gap has been filled. If it has not been filled, then there's a possibility for price to go fill that gap. Okay, this is the fair value gap below. Okay, so they might want to push price down to this area before going bullish. Okay, so let's see. So those are the levels you should be considering buying Euro Aussie. Okay, let's see how the current 4-hour candle closes. And if price breaks this level, breaks this low, then it's likely going to come fill this fair value gap before going bullish. So that's my take on Euro Aussie. I'm considering buying Euro Aussie, but let's wait for a valid setup, a valid bullish reversal pattern to form on 4-hour or the daily time frame before we go bullish on Euro Aussie. I hope that is clear. So that's my take on Euro Aussie. Any question? Any question? Any question? Any question? Any question? Any question? Let me know in the comment section. Okay, let's look at one more pair. Which other? Okay, let's look at one of the JPY pairs. Let's look at one of the JPY pairs before we go off JPY. Let's look at USD JPY and GBP JPY. Okay, USD JPY. This is a bullish setup on USD JPY. This is 4-hour time frame. This is 4-hour time frame. Let's start with the daily. Or let's start with the weekly. So last week was strongly bearish on USD JPY. It was strongly bearish, and you can see liquidity. I think liquidity got cleared. Liquidity residing at these lows got cleared last week. This low got cleared last week. Okay, and you can see price is reversing. There's a strong rejection at the moment from that area of liquidity that was cleared. So on a daily, so you can see yesterday candle closed as a doji. Yesterday candle closed as a doji, and after the close of that doji, let's see the pattern we had on 4-hour. After the close of the doji, what pattern do we have on 4-hour? You can see what we had on 4-hour. It's a bullish. This is a bullish reversal pattern. It is a bullish reversal pattern. You can see spinning bottom, a doji, and an engulfing candle. This is a valid bullish reversal pattern. Okay, so price hits this resistance level. You can see what happened after price hits this resistance level. There was a strong rejection from that level. So if you are considering buying USD JPY today, wait for this resistance to be broken. Okay, wait for a candle to close above this resistance before you go bullish on USD JPY. I hope you're getting me. Wait for a candle to close above this resistance before you go bullish on USD JPY. That's my take on USD JPY. Buy USD JPY if price breaks that resistance level. I hope that is clear. And if you are buying above this area, your stop loss should be few pips below the low of this candle, or you could use this, but I think the risk, if you're using this level as your stop loss, that's about 130 pips. 130 pips. That risk is very high. Okay, though the reward is also high, 130 pips. If you are setting your TP should be, this should be your first take profit. and that's about 300 and something pips. Yeah, about 300 and something pips. So the risk reward is worth it. The risk reward is worth it. So you could set your stop loss using this low, or use this low, okay, or set it about 30 pips below the low of this candle. That's my take on USD JPY. Look for buy opportunity on USD JPY this week, and I think same should apply on GBP JPY. Let's see GBP JPY. So you can see, let's start with the daily. How did yesterday candle close? You can see this looks like an hammer. The previous candle formed spinning bottom, then hammer. You can see. So what we have here on GJ is a bullish setup. This is a bullish setup. You can only sell if the support is broken. That is when you should consider going bearish. Okay, so this support is holding price. You can only sell if the support is broken. So at the moment, GJ is bullish. Let's see what we have on 4 hour. Okay, a resistance. You can see also on GJ there was a strong rejection after price hits this resistance area. You can see this resistance area after price hit that level. There was a strong rejection from that level, and a fair value gap was created here. So price is likely going to pull back to fill this gap that was created on 4 hour time frame before going bullish. So it's either price breaks this resistance for you to buy, and if you are buying, since you know there's a possibility for price to come fill this fair value gap, let's go to let's see what's 1 hour. Let's go to 1 hour. So if you go down to 1 hour, let's see what we have. Okay, so here's the fair value gap on 1 hour. I think, okay, this is the fair value gap. So there's a possibility for price to come fill this fair value gap before going bullish. So you either buy from this zone, or buy the breakout from this resistance. If you are buying from the breakout of resistance, your stop loss should be below this fair value gap. You know there is a possibility for price to come back and fill this fair value gap. We had a fair value gap here, you can see, but this gap here has been filled. Can you see that? The fair value gap that was created here has been filled, and since it has been filled, price might not come back to this area. Okay, price might not come back to this area since this gap here has been filled. So if you're buying from this zone, if price pulls back to this zone and you decide to buy, your stop loss should be few pips below this fair value gap. Your stop loss should be few pips below this fair value gap. And if you are buying above this resistance, your stop loss should be few pips below this fair value gap. Few pips, maybe 10-15 pips below this fair value gap. Calculate the risk, ensure that it's something you're comfortable with, you are okay with the risk before you execute the trade. Any question? That will be all for today's session. Do you have any question? Any question? Do you have any question? If there are no questions, I would have to end the stream. Any question? Do you have any question? Should we end the stream? All right, it appears there are no questions. I really appreciate you all for your participation, and I wish you all a profitable trading day. Bye for now.